Hi there, I'm Dean Heskin. You're tuned in to the Secret War on Cash, our podcast brought to you by Swiss American Trading. I have with me today my co-host, Chris Agelastos. Chris, good morning to you.
Good morning.
All right, well, we're in a new year. 2025 is upon us, and let's get rocking and rolling here and start talking about money stuff. The first article we're going to discuss today, Chris, continuing jobless claims hit 3-year highs as initial claims hold near 7-month lows. Now, this is kind of the continuum of the podcast that we did, kind of rounding out or ending up the year
Mhm.
2024 with, if you recall, we had the jobless claims that were overstated by or
Right.
understated, but
Understated, yeah.
misstated. Let's put it that way, misstated by a million jobs. This seems to kind of be just flowing in that same stream of, again, jobless claims hitting 3-year highs as the initial claims are holding near those 7-month lows,
Yeah.
as I just stated. So, bottom line is the job market seems like it's been in a little bit of trouble recently, and it looks like that might be carrying into 2025. Is there any hope on the horizon, or are there brighter days ahead of us?
Well, I like to think there's always hope, but I also wish we could start the new year with a more positive job outlook. Um, and for people who don't know uh, uh, exactly what the difference is between the continuing jobless claims and initial claims, so initial claims reflect new unemployment claims every week. So this is how many people that were working now filed for unemployment, let's say last week. And we're running about 220,000 people per week who are losing their jobs and filing for unemployment. And really, what that shows us, initial jobless claims, right? What does the job market look like? What can we expect over the coming month? That's why we want to keep an eye on that. But continuing claims, I think, are really probably even more important. These are claims that were filed in previous months, and those people are still looking for work. So they're still receiving unemployment benefits, which means that they're having a hard time finding a job. And so we're seeing, steady couple hundred thousand people a week filing for unemployment, and we're seeing continuing jobless claims hit highs. We're near about 2 million people right now, which is a 3-year high, like they say, since about the end of 2021. So it means that we're not in great shape. And that people are struggling to find new work. Now, is that because of AI? We've talked about that a little bit. Companies downsizing, shifting their management structure. Yeah, I saw a different article on that yesterday that a lot of middle managers are being eliminated. Companies are trying to cut costs and kind of streamline. So, it's probably a mix, obviously, of all of these reasons. But the bottom line is, people are losing their jobs and they're having a hard time finding a replacement, at least one that's worthy enough for them to want to take it and get off unemployment.
Right. Well, it's interesting you talk about middle managers, being replaced or those positions being eliminated. So skipping
Hmm.
into this, CC will put up the second article. As we talk about all the jobless claims, and this has been a problem, it's been an issue throughout 2024. Uh, Again, the misstatement of them by what the government was reporting, et cetera. But then you see
Hmm.
this headline: nearly 2,000 American CEOs quit in 2024, setting new record. Just quit,
Yeah.
like quit, and they're putting interim people in those positions in
Hmm.
lot of cases, let's say. In fact, that percentage or that statistic, I think they said doubled in this article. But when I read
Yeah.
this, Chris, and you have setting this new record, I part of me wondered, you know and we this came up when we were talking about the misquote of how many jobs were actually created out there. Okay, the
Hmm.
million jobs that were the error the government made.
Right.
And we talked about how in the context of how did Wall Street even let this happen? Like Wall Street should have been like, basically up on this and known that, wait a minute, something's wrong with these numbers. And part of
Hmm.
me, what I'm getting at here, what I wondered is like, are these CEOs stepping down because of liabilities that might exist, such as, uh, jobs that were supposed to be created that weren't, or what
Hmm.
kind of financial disclosures they were giving to Wall Street that were not actually accurate. What do you think that is behind, or the motivation behind these CEOs that are just quitting, leaving their job in an economy that it would not seem this is a good time to be leaving your job?
Yeah. Well, there's a mix of reasons. Some of the obvious ones, poor performance, CEOs leaving because their companies aren't doing well, and they're essentially being pressured to step down. Intel, they've been seen as really sort of losing the AI race. Boeing, I mean, they got doors falling off planes and landing gear. I mean, we just had
Right.
a story today, or I'm sorry, the other day about a couple different landing gear on their 737s, I think it was, that weren't coming down, and planes crashing. So Boeing's had a rough time. Stellantis, a huge auto conglomerate, struggling with sales. A lot of vehicles sitting on lots and that sort of thing. So poor performance is definitely part of it. Some of it is obviously retiring, and the interesting one I saw in there was CEOs pursuing new opportunities. So I don't know if that means they're out finding themselves or what, but there is just a bottom line, a lot of uncertainty in the current landscape, and maybe the CEOs are some of them are tired of dealing with it. It's not going as well as they had thought or hoped, or the investors are frustrated with their performance. And like you said, at least the good thing here is they are looking within. So it does give, employees in these companies opportunity to maybe move up. Not that everybody's going to move up to CEO, obviously, but as someone does step up into the CEO position, whatever position they left needs to be filled, and so on all the
Sure.
way down the ladder. So it did say about 77% of the hires were internal, which again is a good thing. And when they go outside of the company, statistically speaking, they have less success, and
Right.
usually they have to fire people more. So exactly why, it's hard to say. I do know also. I mean, look, we've heard a lot about record CEO pay. At some point, some of the figures that you hear these guys are making, if they make that money for 3 to 5 to 10 years, and they take their stock options, and I mean, they're cashed up. Maybe they're just tired of it. Maybe they're realizing, how much money does one person really need, and they're going to step aside and hopefully enjoy life.
Right. Well, and clearly, each and every situation, each and every CEO, the
Hmm.
circumstance is different.
Yeah.
But to me, it kind of just continues to speak to the seemingly um, always present disconnect that exists in our financial markets. And what I mean is, like, again, every situation is different, but you have the stock market at all-time highs. You would
Hmm.
think it's the
Yeah.
perfect situation for CEOs to continue to ride that wave out, but yet you find you have the stock market at all-time highs, but now you have a record number of CEOs as well that are leaving or quitting their positions. It just,
Yeah.
something about it just again speaks to a disconnect, in my opinion.
Yeah, well, look, a lot of people think too the stock market is way overvalued right now, and that could be another
Sure.
thing. A lot of these CEOs are paid with stock options. Let's cash out now while the market is high, or they're concerned about an imminent crash coming. Let's get
Good
out
point.
now. I don't want it to happen under my watch, right? And
Right.
so if I'm cashed up and I can get out of the market at a good time, and not be the fall guy, so I'm sure that certainly is a factor as well for some of these guys.
No, that's an excellent point, because if they do believe that the market is overvalued, and they do believe that those share prices are going to tumble, if even if they drop by 25%, that's, that literally is a 10, 15 year off their
Yeah,
retirement funds, if you will. So it's
that's
a
it.
very good point.
Yep. Yep.
All right. Well, something we'll continue to watch. First time we've covered that, and we'll see if
Yeah.
that trend continues on into 2025. For those of you tuning in, if you have not contacted Swiss America to get some of the information or materials they have on secret war on cash, the gold and silver market, You can do so by calling at 1-800-289-2646 or visit us online at www.swissamerica, that is all one word, .com, swissamerica.com. And if you're not subscribed to this podcast, please do so and follow us on social media. Chris, thank you so much. For those of you tuning in, thanks for doing so, and we look forward to talking with you more in the future. Have a great rest of your day.